You're watching Stockwatch. I'm Simon Brown. Joining me to unpack your stock-related questions today, David Shapiro, Sasfin Securities, Schalk, Louw, PSG Wealth, Old Oak. Be sure to send your questions through email, stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV using hashtag Stockwatch. James, thanks for joining us. We're 2 days into the second half of the year. Schalk, first half of the year probably taught us a lot, and most of all, it maybe taught us that often the best thing to do is nothing, because there was insane volatility, but actually it was a good 6 months at the end.
It was a great 6 months.
A great, yes.
You need
awesome.
to not downplay that. If I told you in the beginning of the year we're going to sit mid-year and we're going to sit with a 16% return, 12-month return, close to 26%, you would have said, "Why do I side? Where do I side?" So yeah, it's been an absolute whopper for the JSE. I had a tweet yesterday where I actually mentioned, local assets were still king. So if you look at the last 6 months, our local equities did phenomenal. Our local bonds did phenomenal. Our property were way up there. So I thought it was a great 6 months. And thanks to the commodities. I mean, this shows you South Africa still didn't lose that commodity flavor, that shine, that gold shine, that now platinum and palladium shine. I mean, you want to take a wild guess, Simon? You want to take a wild guess what platinum and palladium did last month, just in dollar terms, just a wild stat.
In percentages, I'm going to say around 10.
Yeah, percentage.
Around 10.
Come on, Simon.
Really?
You can do better than that.
30, I don't know.
Times three.
That's it. 28% for platinum last month, and palladium 18%. That's a year to date. That's 1st of January 2025 to now. Platinum actually increased by 50%.
Yeah.
Now, man, being the second largest producer of platinum in the world, largest producer of palladium, largest of rhodium, I think 8th largest of gold. Hey, if you can't do well in an environment like that, you're never going to do well, huh?
Yeah, I take your point. David, I mean, and the question came repeatedly through the year, often to you, Nvidia. I think we came in at around 140. We went sub 100. Man, if we went back at all-time highs earlier in the week. I mean, it really is a case of, if you got the stock, be careful to dismount.
Yeah, not at this stage. There's going to become a time where it's time to get rid of Nvidia, like we've seen with all other high-tech businesses. Eventually, the competition comes and issues change. But for the meantime, I still think that it's still got upside. You can't. I think it hit a low this year of well below 100, like 96 at its worst point, and it's come back very, very strongly. It's taken out a lot of skeptics, but it's if you look at the top 10 businesses in the United States at the moment, 3 of them are semiconductors. So there's still a lot of money being spent on infrastructure, with semiconductors probably leading. So there's still going to be upside. We'll take a breather now. It's summer holidays, July the 4th, people away. You can't keep that momentum up. But I mean, I'd be very reluctant to turn bearish on those stocks.
Okay, but you will send a tweet when it's time to sell, right? I mean,
I will.
As long as
and subscribe.
Yeah. No, absolutely. We need that tweet. Let's go to some local stuff. David, Hyprop exiting the Hyde Park corner. I got to say, it caught me by surprise. But they want to focus on Western Cape, Eastern Europe, and bigger malls.
Hyprop were always big malls.
Yeah.
And, the fact that they change it, but I don't think they're unique in this attitude. I think that a lot of the people in retail are starting to look at smaller malls for profit. I'm not a property person, and I can't really reflect on it. Whether the big tenants, whether it's the Pick and Pay that's causing them pain, or companies like that. But there is this move to, much smaller retail outlets, but I'm surprised that Hyprop was sucked into it. They're not waterfront, were they? Canal, down at the Canal.
I think they're Canal, they're Rosebank, a few others. Yeah,
I don't know. Retail is very, very difficult, and I'm talking on a global prospect. In fact, property is very difficult. I know that Schalk was talking about the gains in that, but I still think there's uphill battle as well. The world hasn't come to terms with the end of COVID and going back to offices, and you still got e-commerce to handle in that. So I'm not sure that I would, go into retail in a hurry.
Schalk, I mean, you mentioned property. Last year, property was, what, 30+% up, local REITs. Stunner of a year. Still going this year. Not expensive. If I look at the traditional metric of it's below net asset value, the yields are looking chunky. Is there still space in local REITs for you?
Yeah, I think so. I definitely think so. I must say, not going in against David. I mean, there's definitely challenges. Bottom line is you need to look at the supply and demand. And there's that Stats SA publication that gets released every month, where they look at the actual buildings, and in this case, I'm looking at non-residential buildings being completed. And if you look at specifically the retail shopping centers being completed, you can see we're sitting at levels last seen in 2001, 2002. So not a lot of shopping centers really being completed. Oh, let's call it non-residential properties being completed at all. So it just shows you it's been a tough environment, but that sort of creates an environment where suddenly you just one day wake up and there's not enough stock, so to speak. And that is sort of a general trend that I did see in some of these reports that I've seen. Spear, Resilient, we've had a few of these companies that recently reported, bringing down their vacancies, Resilient down to something like 2% now. But also, you can see that the discount to their NAVs, these companies were trading at well above NAV in this 2008, 2009 levels. Let's take that away because that was just crazy environment. 2050, most of these asset property stocks were trading at NAV levels. Nowadays, they're trading, like for instance, these companies, Hyprop, they're trading well above a discount of 20% to NAV. So I'm saying, yes, I think there's challenges, but that sort of create an opportunity in terms of the price.
No, I got you on that.
Oh, where are you? Down in the Cape?
Yeah, he's in the Cape.
The beautiful bubble. The beautiful
Yeah, that's what I was going to say. Come up to Joburg. I'll take you for a walk around Melrose Arch. We'll go through Sandton and that, and you can take your pick of any property that you want.
I was in
Killarney.
Killarney.
It as a discount.
I was in Killarney Mall yesterday.
On the side of the road, yeah.
Killarney Mall is deserted. Well, not deserted. It's got shops missing left, right, and centre. Schalk, let's stay with you because you and I have talked discount to NAV often. I'm sure you've run the numbers. Reinet looking to sell their pension business. They're at a massive discount. A lot of that discount is already cash because they've exited British American Tobacco. If they sell this, I mean, do they wind up and is there some really good upside? Certainly, one of our guests on Monday's show had it as a pick. What's your thought on Reinet as an opportunity here?
Okay, so firstly, undoubtedly, there's still a discount. This is a company year-to-date performances. We're sitting at 34%. So make no mistake that first the whole unbundling of British American Tobacco Company. Now they're looking at the pension fund. If this is going to be the case, then yes, there's definitely going to be some upside. But you need to look at what's happened already. If you look at the possible, let's call it midpoint scenario, we're looking at an outcome of, if it happens and it goes through, we're looking at about $6.9 billion US dollar. Stating that from these current levels, there's more or less a 16 upside for Reinet. So yeah, I think there's still some upside, but I think that the easy money has been made, definitely.
David, I mean, this is another one of Jan Rupert's, well, the Richemont and Remgro, and I forget that they were called Rembrandt. That's where we're going all the way back now to the 80s.
Yeah, we had Rembrandt Beheerende, Remgro. We had 110 different companies there that they finally consolidated. They haven't done anything since then. I just think that they're getting very old and stale. And I keep saying, look, Jan Rupert is not a youngster. He's my age, so he's heading towards the 80. What's he going to do with it? What does he want to do with it? He's got enough money.
Yeah.
He can continue to buy golf courses around the world, do whatever he wants. He's got Richemont. And I don't know if there are any successors that are going to make anything out of it. And to be honest, Schalk mentions 6 billion. I think that's when you've got a Buffett with $340 billion and $6 billion, I don't think there's a lot that you could do in the world market. So I wouldn't be surprised if we see the end of this business, and you'll finally get that discount closed. But you can take your money now, because it takes a long time before you finally get the payout.
Yeah, I mean,
I don't know what the use of it is anymore
Yeah.
once this goes.
And it's the whole process. I mean, it's not even the payout. It's actually the sale which still needs to happen. David, a question was coming through around Mr. Price. Why is it so weak today? That is a dividend payment. The follow-up question was, are clothing retailers on our market looking good after a sell-off this year? Certainly one of the spaces that hasn't had a good 25, that's because they had a great 24, has been local clothing retailers. Any interest for you?
No, if you go through, I think they're reflecting. Schalk, waxed lyrical. He was really on a high around about the JSE, and correctly so. But when you break it down and you take out the golds and the platinums and the nice business and processes, and funny enough, we had a very good return from AB InBev and British American Tobacco. And you go to SA Inc. at the bottom end there, Mr. Price, Aspen, well, I can't, that was something else, but I mean, Mr. Price, Truworths, Woolworths, even ShopRite is negative for the year, so, and a lot of the banks are kind of hovering around positive and negative. Nedbank very, in negative territory. So I think it's reflecting a tough environment, a very, very tough environment. And I'd be surprised if they can really do incredible, pick up a lot from these levels. I think we need a lot more love from Schalk to get these into the positive territory in the second half.
I'm so worried to argue now, because I'm so worried that David's going to take me shopping at Mr. Price there somewhere in Sandton or somewhere like that. No, but I mean, to defend some of these SOEs and specifically the retailers. I mean, you started this conversation off. They had a wonderful 2024.
Yeah.
And remember, we had that latter part of 2024 where this whole two-pot system. People was crazy about the two-pot system. We're going to look at 50 billion inflows suddenly go into the economy, and where they're going to spend it. Well, they're going to spend it at a place like Truworths, Foschini Group, ShopRite, Mr. Price, and all those places. And we saw the reaction on some of these retailers. It really sort of overextended these runs. And yeah, you mentioned it. I mean, this year they had a horrible time. It's just sort of a retracement from the sort of the exuberance of the end of 2024. I wouldn't be saying that all of them are bad. I still think that the likes of the ShopRites is still quality companies. And weakness, somebody can definitely look at acquiring them. And Mr. Price, it's also a nice company in terms of the cash generative. So yeah, in general, I do think that some of these retailers are starting to look attractive at these, let's call it distressed levels.
And we need to dress, David. Don't forget, we've got to eat. We've got to put clothes on. You can't go out without either. Question coming through. Sun International, Schalk, let's stay with you. Walking away from the Piermont acquisition, their long stop date, and then the Competition Commission's only going to review it post that. They could have extended it. They've chosen not to. I think they're walking away. Your take, I mean, we know about the Comcom and their dislike of mergers. Is there space? I mean, we were talking the Mr. Prices and stuff, but what about local sort of leisure/gaming stocks?
Yeah, I mean, they've been in the news lately. Quite a few of these betting/gaming stocks. But I mean, to Sun International, this is not the first time that they've tried to acquire Piermont. I mean, 2015 they tried a similar one. I think they offered something like 4 billion rand back then. This time it was a proposed close to 7.3 billion rand. But the market, you could clearly see they were worried, because this offer was made March last year. Yeah. And you can see right after the offer was made, you can see there was a massive retracement in Sun International, because again, history. I mean, Sun International just came out of, when I say just, I mean, you can see my grey hair now when I talk about 2020 about just. They came out of a 2020 event where they actually had to go and do a rights issue. And boy, I mean, those people that took up those rights, 9.44, they took up those posts. Today's trading at 47.51, so they did extremely well taking up those rights. But back to your original question, I think the market was a little bit worried. They just felt that they're just sort of getting out of this stressed environment where they had to do rights issues, and they're just getting themselves back into order. And I think this was most probably just a good thing, not going for this called Piedmont. And for people that don't know Piedmont, I mean that's the what's it? Emperor's Palace.
Emperor's Palace. Yeah.
That's it. Yeah.
David,
so yeah,
gaming for you?
Simon, I don't know whether people are gambling like they used to. Did you see the statement that came out of famous brands about which is important. You can see it all the time. So it's Hollywood bets, super bets. You don't have to go to a casino to gamble. So where it's a leisure, where it's Sun City and you go make a weekend of it and you take your family, I can see a difference, or where there's hospitality around. But some of those regional ones, those small casinos that were built, all over the place, I can see them under pressure. I don't know the Empress Palace. That's close to the airport and that. I don't know whether it's a major attraction or whether you get a lot of traffic through there. But Schalk's right. I think there's a little bit of stress coming in there about the broad set of casinos. So
and it is, in the olden days you had to cross into homelands, fake countries, to go and gamble. Then it was casinos. Now it's apps on your phone. David, staying with you, a question came around China. Is China an attractive investment opportunity? And if the answer is yes, what's my best way to do it? Should I just do Naspers, an ETF? Suggestions from the experts. David, you're the expert.
It's so difficult to read China. We don't know where they are. They're battling along there as well, trying to get their economy into gear as well. But there are signs. I don't know if you looked and saw LVMH picking up this kind of concessions on the liquor side. So there's a lot happening there. It's not. I don't think it's very easy to read, but if I was going to go, that's why I'm a Naspers process person, not because of Fabrizio and what he's doing, simply because of Tencent. It still makes up the bulk of the value in those two. And if anything, if you want to get exposed, I think I would just remain exposed through Naspers and process, or if you want to go for Tencent, go direct.
Schalk,
I haven't got a great feel for China.
Yeah, it's fair point. I mean, it is a difficult place. Schalk, do you like China? How would you look to get access, or would you stay away?
Yeah, I totally agree with David. I think for us South Africans, it's to go through Naspers just is way easier. There's different logistics. Trading stock. Yes, you can do Tencent, you can do Alibaba these days, trading through the US. But I mean, why? I mean, Naspers is there, process is there, and you get a well enough exposure to China in that regard.
Yeah, and truthfully, I'm so very lazy. I just have Naspers in my top 40 ETF because it makes up such a giant slice of it. Schalk, let's stay with you. A question. It's two questions. I'm going to put them into one. Is there space for Blue Label to go higher with a potential Cell C listing? And the follow-up question was, should I look at Blue Label or Telkom? What about our smaller telco space? Not the Vodacoms and the MTN giants, but the sort of more localized, smaller telco space. Any interest from you?
Let's put it out there. My disclaimer firstly, it's not one that I'm really looking at. It's a little bit on the smallish side. So, do Blue Label still have upside with this possible listing? I can't really say. I mean, it's a difficult one, and I'll drag my crystal ball closer to try and do that for you. But I mean, timing I think is great. I mean, because if you look at the current environment, we started off the show by talking about the top performers of this year, and most of them being either PGM counters or gold counters. But if you look very closely in that, let's call it top 15, you'll still find two telcos, namely MTN. I think that's an 8th or 9, and then Telkom suddenly. So this is typically where you would like to go and list or spin off one of your holdings when the prices are trading at a little bit better levels than what it was trading, like for instance last year or the year before.
Yeah, I just wonder if our market is truly big enough for 4 telcos. And I mean, Cell C's struggled. I mean, America has 3 telcos, man, and they're way bigger. David, are you a telco fan?
No, no, it's tough. I always say that it costs so much to keep these companies going and keep up with technology. And then we all want what they provide for nothing. You know, we go sit in a Starbucks and that, and we don't want to pay for anything. So nobody really wants to pay for data. And the worry that I have with Cell C and, with Blue Label is that somewhere there's 5 billion that has to be paid off. You can't capitalize that. You can't equitize that or make it into equity. So I'm waiting for the numbers to come through in that. But I think it's become the Renogen type stock, it's become a meme stock, meme coming from nothing. There's a huge amount of punting in the stock, Okay. Everybody wants to own it and talk about, so okay, if I was the Levy boys, I'd cash out.
Okay. So, but a Renogen, they've become sure, okay. David, quick one for you, because I need to go to stock picks. No, of course, Steph somewhere is having a heart attack in Texas. Alphabet, surely looking cheaper than it has in a long time.
Yeah. Yes, it has. I think all of those stocks, don't write off Alphabet. And in these levels, I think, even if you look at the multiple, first they're going to make money. There's nothing wrong with them. There's the big fight for AI dominance. I still think Meta probably stands out, but Alphabet is still very, very attractive at these levels. I think it's sub 20 multiple in PE.
Yeah.
It's around about 16, 17. And it's not that they're not going to grow it as well. So, yeah, I just take all of them. I think you can put all those heavy stocks into your portfolio.
The whole Mag 7, maybe except Tesla. Schalk, Alphabet?
There's a good reason why it sort of lagged. We know that they're sitting with a few challenges now. With the fines, possible fines later this, how they're going to spin off, what they're going to do with Chrome, how they're going to incorporate that. But to add to David, I'm a holder. I'm a holder of Alphabet, and if it traces any further, let's call it relatively retrace against some of the other fangs, I would most probably be a buyer rather than looking to sell. It's a great company.
We need to go to stock picks, but I've got a minute before we do. So quickly, a last question. Is gold going back to 3,000 for an entry? Schalk, your crystal ball.
There's no way. So firstly, you need to look at the environment. If the environment suddenly, all the geopolitical unrest is currently under control, we've got no problems, Iran, Israel, all those countries, everything is just fine. And also that we can start seeing the debt levels of the US starting being to repaid. And we know the big, beautiful bull is not going to help with that. No, I don't think the gold price is going anywhere soon. I'm not one of those people calling, $5,000 or $6,000, but I do think that, for it to retrace below the $3,000, I think that's going to be harsh.
David, you always just abstain on this question.
Yeah, I'm not a great gold fan, but I think it'll go down to 3,000.
Okay, that didn't help.
I think that's why with my stock pick, that's why I'm going where I'm going. I just think that it's time for a rest, and it's. Should I go into it? I'm buying.
Give me your stock pick there, David. What are you doing? US dollar. You're buying dollars.
Buy dollar, sell the rand, simply because I think that the dollars come under enough, pressure. And things will start to turn around. So second half, we get bored. Traders get bored. When they run gold up, they say, okay, it's enough. And that's why they switch to platinum, Historically, and Schalk and that, if you go, platinum was always more expensive than gold. At a huge premium. And suddenly, gold is 3 times platinum. And it's always been regarded as a precious metal. So I think there's that historical thing. It's the same as silver had a wonderful time. So I think we're going to go into a few months of kind of dollar picking up again and gold and all of those coming down. That also means the equity market's going to kind of feel a bit of pressure.
I know. That's why we're not liking your story. Silver, the only silver investment I have is my crockery. Schalk, you're going with Absa.
Yeah, how's that? I mean, going from dollars to, you can't go more essaying to a sort of rand play than going for Absa. Yeah, I mean, this must be the first time I call Absa. Absa, it's just, they recently brought out the trading statement. The ROE has been increasing, looking at a ROE now close to 15%, but they're still sitting with a price to book of below 0.9 times. Now, when you look at the last 20 years average for Absa, you had an average price to book of around about 1.5 times. So I'm not saying it's going to go immediately go back to those levels. I'm just saying it's grossly undervalued. And when I can earn dividends more than what I can actually earn in terms of interest when I'm going to put my money in a money market at Absa, that's usually a sign for me to say, I actually like this. So dividend yield of over 8%, PE ratio of seven times. I think Absa is looking much better.
Yeah, and hopefully
there's an irony there that is so worthy of mentioning. You know, Capitec took its life from being discarded when they formed Absa. It was like Bank of Boerland or something that these chaps put together a few computers and started to make Capitec. And think today Capitec has a market cap of, 400 billion or something, and Absa still battling around 150. I don't know the exact numbers, but it's very interesting to see the history of those two companies.
Yeah, but Absa is,
don't go and pull a drop. Don't go pull a graph off of Absa. You'll cry yourself to sleep, because I think it's trading at exactly the same levels when it was trading at 2008, 2009. So yeah, I agree with David. But what did I say? The four most dangerous words. Am I going to say that this time? It's different.
This time it's different. We'll leave it there. That's all for Stockwatch today. Thanks to our guest David Shapiro, Sasfin Securities. He is buying dollars and selling ZAR. Schalk, Louw, PSG Wealth, Old Oak. He is buying Absa. Up next, the close. Stay watching. Thank you.